Good morning, ladies and gentlemen, and welcome to the First Tin PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, if I may, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to the executive management team from First Tin PLC. Thomas, good morning, sir.
Yeah, good morning, Mark. Thank you very much for the introduction and warm welcome to all of our investors from my colleague Tony, our technical director, and myself to welcome you to our investor call. We would like to inform you about the results that we published today as well for the year 2022. As well as to give you an update of all the operational achievements that we managed so far. So let's start with the presentation. Disclaimer, I believe you have read that already carefully. What's about First Tin? First Tin owns two assets in low-risk jurisdictions in Australia as well as in Germany. So we'll become one of the very, very rare tin suppliers to the tin supply chain with no criticality because there is no child labor. Even more, tin is still a very scarce material and will remain scarce. We will jump into that topic later on and discuss about the overall availability of tin. We own the two projects that represent themselves with a very, very fast path to production due to their very mature status that they have already reached, and as well due to the simple mineralogy, and even more due to the reason that for both of the flagship assets, for Taronga in Australia and Tellerhäuser in Germany, there exists a JORC-compliant resource statements. We delivered like promised and started during the course of the last year our definitive feasibility studies, one for Taronga in Australia, which we started jointly with Mincor, that took the challenge jointly with us to manage that, and one in Germany for our Tellerhäuser asset that is performed by DMT. We have very robust economics and show high profitability at tin prices of $25,000 per ton of tin, which is equal and to the long-term forecast from market forecast companies. And we as well have still significant leverage to higher tin price. Tin is the most forgotten metal of the energy transition of electromobility and electronics. So we are just at the right time to develop our assets and bring them into operation until 2025, 2026. And even more, why we are in a position to do so, due to the reason one, we are well financed throughout 2023, and we as well have a very experienced management team. Here you see some financial for the last fiscal year. What you can see is that we increased our losses for the last period substantially, so from £1.2 million in 2021 to 3.1 million. Why is that the case? Because we started our definitive feasibility study. So we paid our money. We used the money that we raised during the course of last year in order to fulfill our promises to run drilling programs in Australia as well as in Germany, as well as to execute our DFS studies. We still have adequate cash to be financed throughout of 2023 and deliver exactly what we promised, what means that we expect to finalize the DFS for Taronga until end of 2023, while that one for Tellerhäuser will take a little bit longer. Like I said, very experienced management team, so very well known in the mining area, with a number of persons that had substantial success as well in the past to develop mines and bring them into operations. To name only two of them, Seamus Cornelius, one of the major persons with Danakali, and Nick Mader from Australia, which represents, by the way, as well our largest shareholder, Clara Materials, a very well-known person in the world of metals. That's really very unique that we have such a experienced management team, and that's as well the reason why we are sure that we can deliver and will deliver exactly according our promises. Let's have a look onto the tin market. The major application for tin is solder, means every electrical contact you require solder. There is an analysis from the International Tin Association that forecasts that we need in 2030 about 100,000 tons tin more annually than we use today. To give you an idea about what we are talking today, the tin production is in the range of 380,000 tons, means in 2030 we should achieve 480,000 tons. What are the 380,000 tons coming from? Where they are coming from? About 300,000 tons are coming from mining, 80,000 tons are coming from recycling. Means nothing else that the additional 100,000 tons needs to come from the mining industry. Where will it go to? So the prediction is that in 2030, electrical mobility will achieve about 30% of cars produced in 2030 will become electrical cars. That alone represents an additional demand of 50,000 tons, 50,000 tons of tin, followed by the PV industry. Photovoltaic panels stand alone for additional 30,000 tons of tin, and microelectronic will add another 20,000 tons of tin. Without this additional tin, we aren't in a position to deliver the promises of energy transition, neither electromobility nor the artificial intelligence, where most of the electronic will go to. Tin is identified as a critical material in US and Germany and Canada, while the biggest producer today is Indonesia, where, by the way, the Indonesian government is discussing a ban, an export ban of metal tin that will add further burden onto the tin supply chain in the world. Tin stocks at the metal exchanges have recovered, looking back into the beginning of the last year until beginning of this year. Since then, they are declining. They are returning back into a declining way. So there is a good forecast that the market will recover as well. We as well found an analysis from Dominic Frisby that describes with that curve the tin market, the tin price development. And he came to the conclusion that we are in the middle of a very bullish market, even though the tin price dropped substantially from around $50,000 per ton of tin in March, April 2022, down to around $18,000 per ton of tin, which is roughly equal to the long-term average price before. But due to the forecasted growth rates in energy transition, in photovoltaics, in electromobility, in electronics. Substantial demand is forecasted, and that's the basis where a higher tin price is expected by him. Currently means today we are in the range of $23,000, $23,500 per ton of tin, which is still good enough for our projects to remain in a robust economical situation. Now I would like to hand over to Tony to guide us through the geology as well as the projects itself.
Thanks, Thomas. What you can see on the screen here is a map of all the world's known tin mineralisation, in particular those deposits greater than 50,000 tonnes of contained tin, marked in red spots. In addition, we've coloured in all the OECD countries in green. You can see there's a vast disparity between the two. So not much tin is produced in tier 1 jurisdictions. Nearly all of the world's tin is currently produced in either Indonesia, China, the DRC, or Bolivia. So there is a real need for the transparency in the market for tin to be produced from tier 1 jurisdictions. And we're hoping to fill that gap. So first of all, getting on to our Taronga deposit here in Australia. It's been described as having the 5th largest undeveloped tin reserve globally by the International Tin Association. It's situated on land that we have now purchased freehold. So we own rights absolutely to the surface of the land, as well as having tenure for the minerals beneath it. The interesting thing about Taronga is it's a lowish grade deposit, as you can see from the JORC resource estimate there, averaging about 0.16% tin, compared with an average grade of 0.8 to 1% for an underground mine. This is due to the fact that it's a sheeted vein system, and the tin occurs entirely within a series of veins within a hornfels host rock. What that means is that the tin break, the veins tend to be lower strength than the host rock, and when you break the rock, it tends to break on those veins. That liberates the cassiterite and makes it very easy to extract. The other interesting point about this deposit is it sits on a hill, it has very low strip ratio, and it's open pittable. There are very, very few open pittable tin mines in the world. Most are either alluvial or underground. So putting all that together, while the grade looks low, we think this has got potential to be a world-class deposit, and that's being shown by the test work that we're doing at the moment as part of our feasibility study. If you look at the bottom figure on the right, this shows the MPV and IRRs and the capex for various tin prices. This was done previous to us buying the project, and prior to the concept of being able to get nearly all of the tin out at a coarse crush. So what that means is our capex will be lower and our OPEX will be significantly lower. So these numbers are a guide only, and we expect to be significantly better than that, even with the increase in CPI recently. The other interesting point with Taronga is we have recently won all the water we need as far as processing goes under an option by the New South Wales government. So I'll move on to the next slide. So the work that's in progress is basically doing a full environmental impact study and a definitive feasibility study. That has been ongoing now for the last 7 or 8 months. We've collected all the raw data. We've almost finished the drilling. We started the metallurgical test work, which, by the way, is showing exactly what we predicted, that you can get around about 75% of the tin in roughly 25% of the rock after crushing it to a very coarse size of 10 millimeters. We've also recently, you might have seen in the last few days, an announcement that we've partnered with a group called Bid Energy to look at solar power options. This, we think, has the potential to reduce our power costs to approximately 1/3 of what it would be if we had to either hook into the grid or use diesel power. And we certainly don't want to do the latter. Moving on to Tellerhäuser. This is a very different project located in Germany. It's significantly higher grade, as you can see, around about 1% tin. And it makes, according to the scoping study that was conducted by consultants in 2021, using the $25,000 tin price, it has a very significant MPV and a good IRR, and the capex is low and will be low. The resource, as you can see there, is only a small amount in indicated, whereas there's significant amount in inferred. The majority of the work that we've been doing on Tellerhäuser this year has been aimed towards converting those inferred resources into indicated status. So as part of that, you can see on the top of that table there, the Tellerhäuser Deeps drill intercepts. So this has essentially confirmed exactly what we predicted, that the deposit is much, much bigger than the indicated resource area. We did unfortunately have problems with that drilling, and that we terminated the program after only 4 holes of a 25-hole drilling program, mainly because they weren't reaching the target areas that we wanted. It is a very difficult target because it's quite small and thin, and it's at 800 to 1,000 meters below surface. So that presents a whole heap of drilling challenges for us. We're currently just starting a new drill hole with a different contractor, and we'll see how we go with that. Hopefully that will solve all our problems as far as drilling in the deep levels go. The bottom part of the table shows one of our regional exploration projects called Gottesberg, which is a very large, low-grade system. What we were doing in there was trying to identify higher grade parts of the system. And you can see from those 2 intercepts that we've certainly done that. And more work is planned to try and get that into a JORC status that will be a satellite deposit for Tellerhäuser. So having given you that quick update, I'll now hand you back to Thomas.
Yeah, thanks, Tony. And I will proceed with our values. So I already told you that we achieved our inaugural ESG rating last year, BBB rating, given by Digby, a very well-known rating agency within the mining and junior mining industry. But we are not only ESG conform already as a mine developer, as well, we already developed and stick to our vision to become a conflict-free source of tin throughout the whole value chain by sustainable, professional, responsible, and regulated mining. We benefit for sure substantially from our jurisdictions in Australia and in Germany, which are very mature. Nevertheless, on top, we aim and value very high people, and in particular ours and those in the area we are working. And we have a very high mark and eye on safety. That's our core value. I do not need to talk about the environmental conformity, which is in the making, the environmental impact assessment in Australia, and which is already signed off for our German project in Tellerhäuser, where we got the approval from the authorities to go straight forward to the frame mine planning, which represents the construction and operational permitting procedure. How the share price developed? Not very good during the course of the last year. So last share price that I have seen was in the range of 650. This one was still a little bit higher, so representing a market cap actually today in the range of £20 million. What you can see here as well is if you put a tin price line behind, that shows a very similar way. So that shows how our share price is connected to the tin price so far. Our biggest shareholders are Clara Resources Australia with nearly 23%, formerly known as Austin, so has been renowned. Baker Steel, close to 14%, and then already directors with close to 10%. So you can see there is a lot of skin in the game as well from our management and our directors in order to take care that the project will develop, or the projects will develop as promised. There is a lot of upside potential if we compare our valuation in dollars per ton of resource against our peers, where, for instance, Cornish Metals is a comparable kind of an animal because it's as well a tin mine developer. Develops South Crofty in Cornwall and shows by far higher company value per ton of contained resource. I believe that shows a lot of opportunity for the future and to aim to achieve an comparable rating, a comparable enterprise value like.
Hi, Thomas. I think we may have just lost you there momentarily. If I may, what I'll do is I'll just refresh your browser and bring you back through.
There we are. Back in the game. Sorry, I was frozen.
Ladies and gentlemen, please just do bear with me while I reconnect Thomas into the room. Thank you.
Hello, can you hear me?
Yes, we
Hi,
can hear you,
Thomas.
Thomas.
We can hear you.
I was pushed out of the conference. Sorry for that. I would like to summarize the presentation. I guess we have shown you that we are in a good position, that we moved properly forward and as promised to develop our 2 tin projects that represent a very simple metallurgy and as well own already a resource statement. The definitive feasibility studies are underway, as well at the current prices in the range of 25. We have a robust economy, and due to the reason that 25 is expected to be the minimum price required to develop new tin assets, there is a leverage to higher tin prices and a substantial improvement of economic possible, like you might have seen and extracted from the tables that were represented by Tony. Now I would like to conclude the presentation and hand back to Mark, our moderator.
Thomas, Tony, thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Tony, Thomas, we did receive a number of pre-submitted questions ahead of today's event. And as you can see there in the Q&A tab, we've also received a number of questions throughout your presentation this morning as well. So firstly, thank you to all of those on the call for taking the time to submit their questions. And Thomas, Tony, if I may just hand back to you to respond to those questions where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Okay, thanks, Mark. So I will start with the already submitted question. Question 1. What happens if the tin price drops below $20,000 per ton and the project becomes uneconomic? Due to the scarcity of tin, we expect that those drops will become only short-term, like we have seen, for instance, during the course of the last year, and due to the reason that the minimum necessary price to develop new projects like ours and new projects are necessary to supply all the required tin, we do not expect long-term prices below $20,000 per ton of tin. What are the plans for funding the capex? Capital markets are bad right now, so I don't see how you will be able to fund much through a capital raise. We already have made up our mind how to fund projects besides the equity by a capital raise, which is most probably actually a challenge, but I expect that sooner or later the predicted boom of the metal market will start. If it is tomorrow or maybe in the second half of the year, but even then it would be early enough to support us by the capital raise, and there are as well a number of debt fundings available through programs, for instance, offered by governments that came to the conclusion that tin is a critical raw material and required for the energy transition, and as well commercial banks indicated that they potentially would join forces with us in order to get the financing for the funding for the capex setup. But it's by far too early to discuss really details about that, looking onto our schedule that the DFS for Taronga is expected to be finalized end of this year, and for Tellerhäuser even a bit later, at the beginning, maybe in the first half of 2024. So there is still enough time to put together the financing and the funding for the capex. How do you intend on finding the capex required for both projects? That's maybe a question related to the DFS. I guess, Tony, that's the right question for you.
Sure. Well, as you've already mentioned, Thomas, the traditional means of financing these projects is by a mix of debt and equity, and we'll certainly be looking at those conventional financing means. The other options we do have are government support. There's because we will be one of the few companies producing tin from stable first world tier one jurisdictions with no problems with environmental legacies or child labour or conflict metals. We think we will get some support from the local governments. The other option is to do a deal with off-takers, and certainly some of the big end users of tin are potential financiers for us.
Yeah, thanks, Tony. Then one more question in regards to capex. What do you estimate the capex for both projects is now compared to the 2021 scoping studies? Due to the reason that our DFS for both projects are work in progress, we did not reach a status to get an updated version of the capex. I would try to. There is no new estimate for the capex so far. And what we can tell you is that we have different tendencies. For sure, there is the inflation everywhere, in particular for equipment all over the world. So that's a trend that would lead to higher capex. But we have as well a number of activities, for instance, the processing tests that we do right now for Taronga, where the aim is to use at least a very simple and very cheap as well in regards to capex crushing steps for the upgrade of the ore and the up concentration of the ore, and to keep the big end very, very slim, which would then lead to a lower capex of the compared to the scoping study. So there are different trends, and there is no exact answer to that question right now, but we will provide that as soon as we have the DFS for both projects finalized. Please comment on First Tin's cash position and financial strengths. Are both DFS funded till completion? At what stage will fresh funds be required? First Tin is still in a very good cash position and financed throughout 2023. That means fully financed for the DFS of Taronga, while Tellerhäuser will be finalized at the beginning of 2024. Means we are financed throughout 2023 with a little bit of headroom into 2024, but in order to finalize both permitting procedures during the course of 2024 and the DFS for Tellerhäuser, we require fresh funding and additional equity raise. Could you please comment on potential exploration and net present value upside of both projects? Thanks. I guess exploration, that's exactly what Tony understands.
Yep. So with Tellerhäuser, I think the real upside there is Gottesberg, as I've shown. There's some very, very good intercepts there. That's the long-term upside. As well as the longer term, we do have shorter term upside in that we are currently converting inferred resources to indicated. We have large gaps even between inferred resources where we know the geology is the same, and there's very good potential for the mineralization to be present in those gaps. and also the most southerly drill hole we've had to date is one of the best, and so it's really totally open to the southeast. So I think there's some really good upside there at Tellerhauser. Taronga, we've already extended the ore body 400 meters to the southwest of the previous Newmont resource. We're currently infilling that, and we will definitely add that to our indicated resource category by the middle of this year. Having said that, it's still opened further to the southwest, and also we've recently walked over the area to the northeast and seen visible cassiterite there as well. So while we will add to the resource this year, it is still open essentially along strike in both directions. That gives us fantastic upside immediately adjacent to the deposit. And we also have many regional targets, two in particular worth mentioning. One is a project called Great Britain, or as we've renamed it, Tin Beetle, because when it breaks on the fracture planes, the cassiterite crystals look like little black beetles. So that project, there are several intercepts that are very, very similar to Taronga. And the other one is a project called Pan Flat, and that has drill intercepts from the late 1970s, early 1980s that are almost identical to the drill intercepts that we're currently getting at Taronga itself. So we've got both short-term and long-term very good exploration prospects of both properties.
Yeah, thanks, Tony. Next question. What needs to be done to enable institutional investment in First Tin? Market cap has been sliding considerably since IPO, and sticky hands would be very welcome. At least this is exactly what we do, is to finalize and deliver our both DFS studies, because that is what institutional investors are in particular looking for, beside the permitting procedure, so to de-risk as well as to add additional value by doing further exploration and showing what in-ground value is really there. So we have there a number of activities to attract further institutional investors, because there are already a number invested in First Tin. And last but not least, last question. Markets are volatile and high interest rates make funding of new projects difficult. How confident are you in achieving funding in this economic climate? What is, in your opinion, the greatest risk and greatest opportunity for First Tin in the next 12 to 18 months? How is First Tin trying to mitigate said risk and leverage that opportunity? Like I said earlier already, beside debt funding, there is a number of funding opportunities given by governments and the European Union, for instance, to support the development of mining projects. So that would be one opportunity. Beside that, we have still a little bit of time to put together our project financing. And for sure, we hope that the climate will become better, and in particular that the commodity prices will benefit from an improvement of the overall macroeconomic situation. Yeah, greatest risk is tin price for sure. So there we can't do anything against. So there is no mitigation. Greatest opportunity for us is to deliver clear and good and promising DFS studies, and on top the permits, so to get really the license to operate for our both mines. The second, at a later one, we are working on, because that's in our hands, to deliver DFS as well as permitting. I have no further question that were delivered before we started the interview. So now open to answer further question, and I would like to hand back to Mark, our moderator.
Thomas, Tony, thank you very much indeed for addressing those questions. Thomas, Tony, as you can see there in the Q&A tab, we have received a couple of live questions there. So if you would like to address those, then please feel free, sir.
Maybe while Thomas is getting organised, so I can. So the question is, when do you anticipate starting the conversations with off-takers? I would assume this is a long process, and does this start pre-DFS on cases such as this or post? And look, I guess mate, do you want to answer that one, Thomas? Or?
No, go ahead.
Yeah. So we already have started some discussions with off-takers, but that you really can't get down to the nitty-gritty until you have your DFS finished. So I guess it's a little bit of each is the answer to your question. We're starting to know the right people to talk with, and starting to know what they're after and what they might be able to do as far as helping us finance goes. But the real negotiations won't start until we know what we've got and what the feasibility study is telling us.
And I would like to add on that. So we had a number of discussions for sure with the one or another trader, which is very keen to sign offtake contracts already very early. So means right now, due to the reason that, for instance, maybe you have heard that the tin concentrate supply in China is still short. So that's one of the reasons. But we didn't do that so far because what they offered, in particular in contribution to the financing, was not very attractive so far. And due to the reason that we were financed, it was as well not necessary. And on top of that, maybe you remember that mid of last year, we published as well in a press release that we have signed an MOU with a local smelter close to our German project in Freiburg. And what we do right now is we do jointly a scoping study for what it requires and what is the cost and what is the capex for a build-up of tin smelting capacity as well. So that would be then potentially as well become an off-taker. So we are in discussions of that, and we as well have no doubts that the at least signing off-take contracts is most probably not the most challenging work we have to do within the next days. So there is enough opportunity for us, and that means as well for our investors to at least market our future concentrates. So second question, has there been much M&A activity in the tin space due to market conditions? There has not been much M&A activity in the past. So at least if you look the tin miners, all of them are, I would say, mid-size companies, and the tin developers like us, rather the smaller ones. So there has not been much M&A activity in the tin world. And I would even say there is still no major miner, no blue chip from the mining industry involved in tin mining at all. So they at least left that area after the crush of the International Tin Council or in the years thereafter.
I guess the tin space is very, very small, especially ones that outside of China, Indonesia. So there is limited opportunities for M&A activity.
Yeah, which is really a surprise, because to give you maybe some estimated figures, if assuming one would build 10 million electrical cars, then there are figures available publicly that an electrical car requires 89 kilograms of copper, which is equal to roughly 3% of the total world's copper production. It requires a decent volume of lithium for a battery set. So if the average battery set is in the range of 70 to 77 kilowatt hours, then we talk about 3% of the world's lithium production predicted and forecasted for 2030. But it requires as well 15,000 tons of tin, which is equal to 4% of the total world's tin production. So that's really where I wonder why no major player woke up so far to put his hand on tin, while they are still focusing onto metals like copper, like lithium, like nickel. So maybe that's in front of us. We don't know.
Thomas, Tony, if I may just jump back in there, and thank you very much indeed for addressing all of those questions that came in from investors. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses on the Investor Meet Company platform. But Thomas, just really before really looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company. If I could please just ask you for a few closing comments to wrap up with, that'd be great.
Yeah, thanks. Thanks, first of all, to all that participated the call and that contributed and enriched as well the presentation by questions, where we are happy to answer to. We have shown that we used the equity we raised during the course of last year, in particular for exactly that promises that we gave last year. We moved and developed our projects forward to achieve a DFS for Taronga end of this year, for Tellerhäuser beginning of next year. So we added content and we added volume, and I hope we, both of us, so Tony and I, could make you confident and show you that we spend the money for the right topics. So thank you very much, and bye-bye.
Thomas, Tony, that's great. And thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of First Tin PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good morning to you all.